Hi there. Welcome back to Prices at the Pumps, our weekly look at all things energy related right here on SaltWire. I'm Scott Squires and pleased to be joined as per usual by the energy expert Dan McTagg. Dan, a few things to talk about for sure this week with oil demand and some things happening with EVs and tariffs. We'll get to all that in a few minutes, but consumers want to know, right? Atlantic Canada adjusting prices tomorrow, Thursday, and then Friday. First up, what can Newfoundland and Labrador expect tomorrow when they go gas or diesel up, and then the rest of the region for Friday?
Well, it looks like the end of the line as far as the decreases that we've seen. Newfoundland, of course, is about to go through some pretty significant changes when it comes to how gasoline numbers are furnished. I haven't been consulted, but I'm sure that my predictions have a lot to do with why the PUB there believes it's important to make those changes. It looks like we're looking at a very small increase, maybe 0.3 cents a liter for gasoline. On the diesel side, up 0.7 cents. So nothing to write home about, but considering we've seen now several weeks in which prices have dropped at a time in which demand tends to be very strong, it's anything but surprising that we're at the levels we're seeing today. I mentioned the PUB because they're also likely to punt one form of information by which they gather their weekly and replace that for another. I think they're gone from one organization to possibly to Platts to another group whose name escapes me right now. I use Opus. They tend to be a little bit more reliable, especially when it comes to racks. Nevertheless, what that means is that the rest of Atlantic Canada on Friday is going to see a very similar change. Although last week we saw some even greater drops in gasoline prices than what is expected. I thought it was about 3.5 cents. It turned out to be 5 cents a liter decrease, which means there's a lot of loosey goosiness in how we make these prices. And if we don't get it right one week, they tend to they tend to smooth out or to make the adjustments the following week. Either way, as I've contended for some time, regulated prices might have been, important and helpful in an era when we didn't have predictability. But that's now pretty common, and one has to ask the question whether or not Atlantic Canadians want to continue to have, a Byzantine system based on something that no longer exists. In the case of Nova Scotia, we've talked about before, Scott, it was to protect a class of gas stations that don't exist anymore, independent retailers in rural areas of the province. So all said and done, Newfoundland looks like they're going to join the other four Atlantic provinces sometime in the fall, in which they will start to have gas prices change on Friday rather than on Thursdays.
So a little bit of information there, Dan, and reference it off the top. All kinds of news coming out the last few days to do with world oil markets, prediction of how much is going to be used, electric vehicles, and tariffs. So, and a lot of that comes from Javier Blas from Bloomberg. Couple of posts he sent out on X. I'm just going to read you a couple, Dan, and then I'll get you to weigh in on your reaction and how you feel that it could potentially trickle down to us here in Canada and Canadian consumers. So he sent out a couple, but one that kind of caught my attention. This is just from a couple of days ago. And he says, just over the last week or so, do you see a trend? New Zealand to reverse ban on oil gas exploration. New York indefinitely postpones congestion fee. U.S. raises fuel economy standards less than proposed. Green parties lose vote in European elections, or you lose vote share in European elections. Just on that one, Dan, a lot of information there, but just kind of break it down. What does that mean to your ears?
Well, it means the world is getting a grip and it's being fed a significant dose of reality, which is pushing back on the narrative of net zero. A lot of countries fell into this trap of saying we can do all these things, the great transition. But whether you're in New Zealand, where governments have changed there and said we have to be realistic, we need more gas, we need to be able to explore our own resources rather than rely on others. And even if we do try to achieve those utopic goals, we're going to need more production of energy, not less. And we can't rely on windmills and solar panels made in China to do that. When you look at what's happened in Europe in the past week, the parliamentary elections for the European Parliament were a stunner. I mean, frankly, all the center and left and green coalitions and parties in places like Germany, in places like France, were basically lined up and punted right through the end zone, with parties now committed to bringing Europe back to some degree of sanity on energy. And so, I talk a lot about energy affordability. It's part of what we've been working on now for well over 5 years. We're starting to see this now with respects to energy availability, energy reliability, and the cost of energy. And I think that's compelling governments to really smarten up and to move away from the idea of taxation as a means of achieving a lessening of that one molecule. Because we're not talking all pollution. To term CO2 pollution is scientifically dishonest. But if we're going to attack one thing to the exclusion of all others, I think many people are starting to think this is not the route we should be taking. At the end of all of this, though, I think, Scott, we're looking at governments which are going to be forced to change, and one after another, like the dominoes, they're falling. Canada's only a matter of time, as we know, clinging to utopia, ideas on climate that, frankly, are being held by a thread, and Jagmeet Singh holding on and preventing this coalition from falling.
Something else from Mr. Bloss of Bloomberg as well that he sent out just a few hours ago, Dan, on this Wednesday as we record. Global oil demand is trending above every IEA scenario, and he puts in parentheses, measured as total liquids. So much so, says Javier Bloss, that achieving net zero 2030 numbers feels like science fiction. And again, I know you're always watching markets and trends and global demand, consumption, et cetera. Again, Dan, your thoughts on that and what it could mean to us here in Canada?
Scott, there isn't a week that we have not discussed the fact that energy demand is going up and that markets are consistently trying to ignore this, whether it's because they're on ESG mandates or whether they're trying to divest or they're following the current norm. The reality is that the world is going to continue to demand more energy, not less. And it's not just because of growth of population. The answer for Canada is who is best to supply that energy. From my standing, it's not because I'm biased. I think Canada, with the third largest provable reserves of oil and fifth largest with respects to natural gas, should be stepping up to the plate, as opposed to making tough decisions about saying we're out of money, we can't pay for our social programs, so we're going to nix and raise capital gains taxes, all sorts of other unpopular outcomes of a government that is running out of money very quickly, other people's money, I might add. But at the same time, I think what Bloss is saying is that the International Energy Agency, who I've been very critical of. In fact, this morning on Twitter, you'll see my gas price wizard site. I've been hammering the IEA because they've lost track of their mission, which is energy security. And they have adopted and gone full crazy on the idea that we should somehow believe that demand for oil is going to end. They've done this 14 or 15 times with their data and got it wrong 14 or 15 times. So they're not a credible agency. And people like Fatih Birol, who's their executive director, and the whole bunch located in Brussels should pack up and go. And we shouldn't be subsidizing these people. If I were Prime Minister tomorrow and I was at the G7, I'd be asking for us to give strong consideration under OECD to stop funding these guys, because their narrative is completely contrary to the mission in which they were established back in the 1970s to ensure energy security. What they're proposing through green policies is energy insecurity, global destabilization, and they can't even get their data right.
Dan, last week when you talked about the oil reserve, the provable oil reserves in Newfoundland and Labrador, and talked about that basically, they could be like Norway and have a windfall instead of a major $18 billion deficit. I cut that clip and put it on our YouTube shorts at our SaltWire YouTube channel. Got amazing engagement, Dan, all kinds of views, some comments on that as well. We can reach into that more as we go along, but staying with oil, gas, transitioning, green energy. We've talked about here the push towards electric vehicles and EVs, and we understand it. We've talked about the battery plants being built and the investment in all of that. Something I find interesting, Dan, as a consumer, if I am going to buy anything, and let's talk about electric vehicles, I would like to find the best electric vehicle at the lowest price, right? I've got a budget. I've got to think about it. Hey, you want me to drive an EV? Okay. Let me find the most affordable one, wherever it comes from. I currently drive a Toyota. That's not a North American vehicle. That's an imported vehicle. I say all this because of this, Dan. And again, from Javier Blas. We should give him a producer credit for this episode of Prices at the Pumps. But he talks about something that just happened recently. Again, he put this out today, just before we recorded. He said, it's official. European Commission announces its proposed level of tariffs against Chinese electric vehicles ranging from 17 to 38%, depending on the manufacturer. Brussels, which is where the EC is located, Brussels says Chinese companies benefit from, quote, unfair subsidization, end quote. And then he has a document there put out by the European Commission, a press release. But then he also goes on to say, does Mr. Blas, I repeat what I've said in the past, and this is what really got me, Dan. The West, let's think about Canada. We're part of the Western world, right? The West cannot have a quick and cheap energy transition without Chinese state subsidized manufacturing. Take that away, and the transition would be slower and more expensive. It is a policy choice. And what I read into that is going to be more expensive for me, the consumer. Again, a lot there, Dan, but I know this is something we talk about and you're very passionate about. Again, just lay out your thoughts about what you're seeing there with these tariffs and what that could mean to the consumer in Canada.
I think Mr. Blas and others have basically created the scenario of the impossibility of us having our cake and eating it all. We can't do that. I mean, Chinese production is much cheaper than we can produce anything in Canada. They don't obey the same environmental rules or labor rules that we have here. And if you're going to achieve this net zero, you cannot do this by spending $60 billion of taxpayers' money in Canada to incentivize companies to come here and to build plants. I'm within eyeshot of Oakville, Ontario. My own site I was down there doing a YouTube video talking about the fact that the Ford plant is shuttered for 2 to 3 years. The Ford plant, by the way, a conflict of interest. My father-in-law worked there for 40 years. And so for the first time since 1953, that plant is shut down. And while some say it'll be back in 2027, despite $1 billion in federal and provincial money to build EVs, I don't see that happening. Electric vehicles price is too out of reach for most people. And that is, of course, a bigger problem because unless you find things that are much cheaper, who controls the minerals? Who controls the technology? If it isn't South Korea, if it isn't China, there isn't very much in the way of the technology that's involved that doesn't employ their strategic advantage, their technological advantage, and their price advantage. So what this all means is that now that we've sacrificed the internal combustion engine industry, which is extraordinarily lucrative, profitable, and in high demand, if we're going to shut that down in favor of EVs, but then say the only EVs that you can have are the ones that are the most expensive, then I think it's a double loss. It's a double whammy. And this should be a very strong argument, I think, for those who believe that EVs are somehow the solution. My answer is simply it's improbable, impossible, and unaffordable and impractical, especially in a country like ours. I want to point out another thing that doesn't get much mention. The Stellantis plant that you put 15 billion bucks of your money into in Windsor, Ontario. LG, which is the partner, the South Korean owner of the battery technology, is saying we're going to slow this down because we don't see the market there. The market has slowed. The idea that people want EVs continues to drop as people recognize that it's an impossible goal. And it's one that is forced by governments as opposed to making economic and practical sense. So from all these perspectives, what Europe has done is basically said, we can't handle the pressure. We're going to shut this down. We're going to impose tariffs on China. That's not likely to lead very well because they're worried about dumping. That's not going to lead to anything more than inevitably recognizing that we lost the battle on EVs from China a long time ago because they couldn't beat us on efficient internal combustion engine production.
Dan, always so many things to wade into with you here on Prices at the Pumps and SaltWire. And always great to get your point of view and your expertise being in the energy sector for the decades that you have. And again, almost 2 full decades as an MP. We really do appreciate having your expertise here. Dan, before we wrap up with you, we've talked about a couple of pretty significant topics here the last few minutes. Anything else out there catching your eye? Anything else you're keeping an eye on over the next little bit, either domestically here in Canada or even internationally?
Adding to my worry as an analyst is the fact that the Energy Information Agency of the United States Department of Energy, of course, is providing data which seems to be at loggerheads with the reality on the street. The American Petroleum Institute, we see just in the past couple of hours where their data suggests a big build in oil inventories, while the industry is saying there's been a decrease in oil inventories. That both cannot be right, and both cannot be wrong. So I think we're coming to an important juncture, not just for this particular area of energy, but in all facts. We need a better understanding of data, because if not, someday something is going to happen in the not too distant future where the United States Department of Energy, along with IEA, the International Energy Agency, are going to become, seen as getting their data spectacularly wrong and misleading the markets. If that happens, and suddenly we have a massive drop in production, we're going to see a huge spike in energy. And I think that's why these agencies that are, proffering this conflicting data have either got to get their act right or stop predicting, because, or stop analyzing, because it's important that we have solid data on which to base public policy and on which price discovery is extremely important. I raise this because it's very hard to understand where the industry is going and where prices of everything are going if what's being furnished either by one side or the other is so remarkably off base.
Dan, I'm not sure if this is a question answered quickly or easily, but what you just laid out, if there's these two agencies that are supposed to be run by highly respectable, smart people, you would think, that have access to the same data, the same information, how are these two sides coming up with such different numbers? One, as you said, saying, oh, we've got a surplus, reserves are up, and the other saying, oh, no, inventories are down. How can there be such a discrepancy, in your opinion?
I think the energy department, has taken a very different view, and there may be some political involvement in terms of trying to give a rosy picture where one doesn't really exist. It's an election year in the United States. I hope I'm wrong, but we know that the Energy Information Agency, U.S. Department of Energy, has changed its methodologies for calculation, and I think that's leading to some real concerns, especially when you know that rig counts in the United States have dropped. They're about 10 to 15% below where they were this time last year. Unless every rig is producing 15% more, there's no way the U.S. can keep up with 13.7 million barrels of oil a day with 15% less production capability.
Dan, we're going to get you out of here in just a second because I know you got lots of other stuff to do. But when folks aren't watching and listening to you right here on Prices at the Pumps and SaltWire, where else can they find you? I know one place, it says right behind you there, Canadians for Affordable Energy. But where are some of the places that folks can reach out and connect with you, Dan?
Sure. AffordableEnergy.ca is my website, president@AffordableEnergy.ca. And of course, you can always interact with me where we can and have a civil discussion at Gas Price Wizard, which is, of course, on X. Those tend to be my two areas of concentration. I couldn't do others, but I have only so much time during the day between that and predicting gas prices. So those are the two means, and hopefully people will engage. But of course, you really want my best thoughts that are up and current and on point, come right here to SaltWire. I think that's probably the best thing we can do.
Appreciate that. And I would agree with you, Dan. Always a pleasure to chat with you, sir. Enjoy the rest of your day. Have a great weekend ahead. And as always, we'll reconvene and do this again soon. Thanks, Dan.
Looking forward to it. Thanks, Scott.
Take care. Bye-bye.
Bye now.